All right, brand new equity peaks in the stock index portfolio 25 in both scenarios that we've started since March the 3rd, both setups. I want to go over the difference between the live and the hypotheticals from the statement versus the hypotheticals. And you can see the total. I've had the P&L, daily P&L from the statement right here, 14,645.76. Hypotheticals, 14,827.50. And what you see, what I'm doing here for the hypotheticals, I'm taking 60% of the daily P&L. I'm going to look at show you the portfolio calculator, show you what I'm doing. And also notice that we switched. We made one adjustment starting on April the 12th to use a larger stop loss on gap continuation 2019. That is taken into account here. The hypothetical results track with the March 3rd portfolio through the 1st through the 11th, and then from the 12th to the 22nd, the hypotheticals track with the April the 12th portfolio. And I'm going to show you that now. Here is the April the 12th portfolio. You can see it's at brand new equity peaks, and you can see the drawdown curve. You can also see the March 3rd portfolio that we traded March 3rd through April 11th. We had a good March with this portfolio. We thought that the gap continuation 2019 needed a bigger stop loss. It had a drawdown at this level, and the worst case drawdown from 2011 held, but it was at a worst case drawdown over the past, say, 10 or 11 years. We adjusted the stop loss on gap continuation, and what we did is we took these daily P&Ls, 60% of the daily P&Ls. Why 60%? Because we're trading 6 micros instead of 1 E-mini. So 60% of those daily P&Ls right there, and then we went and adjusted this portfolio setup and took this and 60% of the daily P&Ls from this point forward to get the total results. And so once you do that, you can take a look at this and see the hypotheticals pieced together, 14,827.50 from the statement, 14,645.76. So very close, about $180 off from the hypotheticals, which is really, really close in a setup like this that trades this much. And so really good results. Really happy with the trading this past week, the last couple of days. And, you know, when you go through trading like this, you see lots of losing days. We had a fairly large losing day here, but a lot of little losing days. Fairly large losing day here, but we had some big winners. Up 9K, up 7K, up 13K, up 4K. So your average winning day is bigger than your average losing day, even though you might have more losing days on the month. If your winners are bigger than your losers, you can do that. So equity peaks either way, whether you've made that adjustment or not. Both of these portfolios, that this one originated on March the 3rd through April the 11th, it's at equity peaks. And this one that started on April 12th, it's also at equity peaks. You can make that adjustment now if you haven't already. And the micro version just is 10% of that. So you could trade, if you're trading the 200K portfolio, you can multiply this one times 6, or you can take 60% of the E-mini version, because one micro, there's 10 micros per E-mini. So that is what I wanted to share with you in the portfolio setup. And we have 5 trading days left in the month, and we're right at equity peaks. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.